Did you know the 2008 financial crisis began decades earlier with an idea called securitization? It started in the 1970s, when Louis Ranieri, a young bond trader at Salomon Brothers, pioneered the concept of bundling mortgages into mortgage-backed securities, MBS. The idea was simple. Instead of a bank waiting 30 years to collect mortgage payments, it could sell them to investors and get cash up front. This fueled credit growth and made home ownership easier. By the 1990s and early 2000s, securitization had exploded. Big players like Lehman Brothers, Bear Stearns, Goldman Sachs and Citigroup were heavily involved. Fannie Mae and Freddie Mac, government-sponsored enterprises, also packaged massive amounts of mortgages. At first, it worked beautifully. Pension funds, insurance companies, and even foreign banks poured money into these securities, believing they were safe. Ratings agencies like Moody's and S&P stamped them AAA. But by 2004-2006, greed changed the game. Banks approved millions of subprime mortgages, loans given to people with weak credit or no income checks, because they could immediately bundle and sell them. Then came the collapse. In 2007, US homeowners began defaulting in huge numbers as housing prices stopped rising. Mortgage-backed securities lost value almost overnight. Lehman Brothers, led by CEO Richard Fuld, held over $600 billion in these toxic assets when it filed for bankruptcy in September 2008, the largest bankruptcy in US history. Bear Stearns, run by CEO Alan Schwartz, collapsed earlier in March 2008, sold to JP Morgan Chase for just $2 a share, down from $133 a year before. Insurance giant AIG, led by CEO Martin Sullivan, lost over $180 billion on guarantees it sold for mortgage securities and had to be bailed out by the US government. By the end of the crisis, the world had lost an estimated $22 trillion in household wealth, with 8.8 million jobs wiped out in the US alone. So what went wrong? The idea of securitization, created to spread risk, was twisted into a machine for short-term profit. The result? A global meltdown that shook Wall Street, Main Street, and nearly every economy on Earth.